Boris Schlossberg, Managing Director at BK Asset Management.
BK Asset Management's Kathy Lien.
Happy New Year, everyone. Hello. I was just trying to get rid of that annoying banner. Good morning, everyone. Say hello if you're here and you are ready to rock and roll. Let me know you can hear my voice and see me and that everything is working well. Yes, first day back, the Stephen, it seems like, there's always going to be some issues, but we figured out that pretty quickly. I hope everyone had a nice break from the markets because, we did not necessarily see any meaningful moves over the past 2 weeks. It's really been just a grind. And, that's something, that I had cautioned everyone about, which is that, typically the last 2 weeks of the year, we don't necessarily see really big moves and that, we may not necessarily have any real continuation. So it's much better to kind of step aside, take a break and reassess and start the new trading year fresh, which is what we are doing today. Before we begin, let me know if you were trading over the last 2 weeks and whether you caught some good trades, what they are. I always like to engage the audience. We are having a lot of big events this week, which we'll talk about, but let's take a minute to kind of talk a little bit about how trading has gone in the last 2 weeks, or whether you were like me. I was on vacation in Hawaii and really taking the time to just kind of take a much needed break, as Gamer Squad says, and start the week fresh. Now, what was interesting though is that we did not have a Santa Claus rally last week or last 2 weeks at all. We talked a lot about seasonality. We're going to look at some seasonality charts for January. But what's really interesting is that the seasonality that we expected in December was not necessarily as strong as we thought. I'm going to pull up a chart right now and I'm going to show you. Let me see if I can get organized here. All right, I'm going to add my screen to the stage. Let's get rid of my indicators and let's just pop on seasonality and talk a little bit about what did not happen. So December is supposed to be a really good month for stocks. And normally it is, but not in 2024. We actually had a 2%, almost 2% drop. If you look down at seasonality here, right here, almost 2% drop in the S&P in 2024. So in January, it's supposed to be a bit of a wash. As you can see here, it's about 5 out of 5 months of gains or losses in stocks. However, because we did not necessarily have that Santa Claus rally in December, and because, remember, it's going to be a new president in January, we could see some enthusiasm and some recovery and some optimism going into the beginning of Trump's second presidency. So even though maybe perhaps because we did not get that Santa Claus rally in December, we're coming from a lower base, allowing us to see some gains. Now, it won't be a straight line upwards because we do have the US jobs report this week, which we'll talk about. But that could create a little bit of a wrinkle that may lead to first, perhaps a little bit of a decline, followed by an opportunity to buy and maybe some gains as we head into Trump's second term. December is supposed to be a really good month. Should have been a really good month for the euro. 9 out of 10 years, the euro had rallied in the month of December. But in 2024, this is actually the worst performing year for the euro in the last 10 years. The euro actually dropped to its lowest level in 2 years. Pretty much last week. It dropped to its lowest level in 2 years last week. It snapped back, but seasonality also did not play much of a role in the euro's performance. Now, January is typically 7 out of the last 10 years were really weak for the euro. Look at February, 9 out of the last 10 years. You have to take this with a grain of salt, right? Because seasonality is important, it's strong, but so are the fundamentals in the market. And the reason why the euro fell so much in December was because the Eurozone is truly the weakest performing country. And of all the countries and currencies out there, the central bank that is expected to deliver the most rate cuts next year is going to be the ECB. And so that is why the euro dropped 2% in December. That's another reason why January, February, we could still see the euro remain weak because the threat of tariffs, along with just the fact that 100 basis points of rate cuts are expected from the ECB this year, in contrast to the 50 basis points of rate cuts from the Fed. Actually, this is a good time to see how many of you are paying attention and how many of you are not. So I want you to type in the comments who you think is going to be or which currency you think is going to see the most interest rate cuts in 2025. Take a wild guess. The country that you expect to see the most interest rate cuts in 2025. Come on. Take a wild guess. I want to make sure that you guys are paying attention because this will be what drives where currencies are going this year. I'm seeing a lot of Europe, a lot of UK. Absolutely right. I already gave you the answer prior to saying it, which is that the ECB is expected to deliver the most interest rate cuts, 100 basis points of easing this year. Now, the question that I did not give you the answer to, which is which central bank is expected to deliver the least interest rate cuts in 2025? You're all absolutely right with Eurozone for the most interest rate cuts. Now take a wild guess. Which one will be the least interest rate cuts? All right. It seems like it's a trick question. It's a trick question because the real answer is what Charlie and Mark said, right? The real answer is Japan. They're the only ones that are expected to deliver, interest rate hikes in 2025. And the market is actually pricing in 75 basis points of rate hikes from the Bank of Japan, which could be a little optimistic. But the ones with the least interest rate, I love that picture of you, Richard. The one with the least interest rate cuts, if we're just looking at cuts and not hikes, is expected to be the Fed. So even for those of you that are joining me for the very first time, there's only one thing that you follow when it comes to fundamentals. It should be who's doing more, who's doing the most, who's doing the least, who's doing more, who's doing less in terms of interest rate hikes and cuts. And because 2025 will still be a year of monetary easing, which means that the world is going to be in rate cut mode. It's going to be about who cuts the most or who cuts the least. And so, therefore, the least, of course, will be Japan, because they're the only ones looking for rate hikes, and the Fed. And the most will be Eurozone, UK, maybe even Australia. The market is pricing in, and we're going to run through this when we go through the heat maps. The market is pricing in 80 basis points of easing from the RBA this year. They're not quite ready for it in January, but the market is looking for some aggressive easing. Now, of course, all of this can and will change throughout the course of the year, which is why it's important to join the Monday live stream every Monday, because we talk about it. We talk about how these outlooks are changing, and the most important thing is not what's happening right this moment, but what the market has already priced in and what is expected to happen in the future. And that is what we talk about every single Monday. And we'll start talking about that in a minute. But I just want to mention gold real quick. So gold is supposed to have a strong month as well in December. But it turns out that, it ended up pulling back in last year. And so the seasonality effect, is no longer in play. And this is interesting to talk about because, the Trump presidency is expected to bring a bit more uncertainty in the world, in the markets, which should be positive for gold. But that may not come until March, until February, until later in the year, when the tariffs become much more serious and the market is less focused on the opportunities and the positive implications, the potential positive implications of a Trump presidency. So we'll come back to talk about all of this, but let's talk about first, what is kind of the overall theme of this week and, what I'm focusing on. Before I do that, though, we will be having a top 10 trades of 2025 live stream webinar. It's actually going to be a webinar. Let me drop you this link. It's going to be on the 18th of January. So make sure you register for it. Top 10 trades to watch. I'm just going to put that into the chat. Top 10 trades to watch for 2025. I'm obviously still preparing for it because I just, let me just do this again because I just came back from vacation. So we're doing it on let me put this into the top chat. So we are doing this on January 18th. It will be recorded, so make sure you join us. But yes, in 2025, it's going to be us shifting from what the outcome of the U.S. election will be to what the impact of the U.S. election will be, and what Trump 2.0 will mean for the markets and for trading opportunities. So on Saturday, January 18th, it's going to be really relaxed. We're going to talk to you. It's going to be at 7 a.m. New York time. Some of you may not be up by then. It could be the perfect time for our friends in Asia, Australia, Europe. If you can't attend that morning, no big deal. It's going to be recorded, so make sure you register, and we will send you the recording. But we'll be going over our top 10 trades of 2025. But for this week, you can see in my heat map that the outlook for the dollar is neutral. Now, before I continue, how many of you plan to join us? Give me a green thumbs up if you plan to join us on January 18th. Let me look for my green thumbs up. Let's see, green. There's no green thumbs up. Let's go look for a green heart if you plan to join us on January 18th and you want to learn our top 10 trades. Okay, wonderful. All right, I look forward to seeing you all there, and we'll be working hard on creating the all the information, the slides to explain to you what our top 10 trades will be. Awesome. Okay, so going back to this, my outlook for the dollar this week is neutral. And first I want to say that my overall outlook for the dollar is still bullish, but I do believe that the dollar is going to pull back this week because Fed Chairman Powell has said to us that he believes that the jobs data is overstated. And for the US, there are two pieces of data that are very, very important this week. Take a wild guess. What do you think is the number one most important piece of data this week on the calendar? I love to make these sessions interactive to make sure that you guys are following along, that you're understanding. Someone let me know, you're going to be the MVP if you're the first one. HMH is our MVP. All of you are saying yes. The number one most important report is NFP, but it's not just NFPs. We have actually three things that are important for the US this week, which is going to be NFPs. It's going to be, I'm going to type this into chat so I can put it into our pin. NFP, the Fed minutes, and ISM services. These three, let's see if it's going to pop up. Yep. These three are going to be the most important events on the US calendar. There's a lot of data, a lot of events on the calendar this week. We start the week off with the Fed minutes, and then we go to ISM services, and then I believe that's true. Let me double check the calendar. Where's my calendar? Yes. No, we start the week off with ISM services, then it's the Fed minutes, and then it's non-farm payrolls. And what's interesting is first, with ISM services, we did have a huge jump in manufacturing activity. And everyone kind of anticipates service sector activity to continue to improve as well. One of the main reasons why the dollar has been so strong in 2024, particularly in Q4 of 2024, is because we have had so much upside surprises in US data. Raja, I know you're asking this question, so I'm going to drop you the link to our fundamentals course because you are asking a lot. Maybe Boris can do that. He can drop you the link to the fundamentals course while I am talking. But it is, the overwhelming upside surprises in US data that has driven the dollar up. And, that rally is looking a little bit vulnerable. It's looking a little bit shaky. And so if we have any downside surprises, any misses in ISM services and ADP and NFP this week, that could very much lead to weakness in the greenback. So yes, the market thinks that we are seeing strength in the market thinks that we are seeing strength in the hold on a second. The market thinks that I'll get the fundamentals course because I guess Boris is not around. Hold on. Let me just find the link for the fundamentals course for you. Here it is.
No, I can't seem to find it. That's why I'm just looking.
It's on every single YouTube video, Boris.
Okay.
But, let me pop it into you guys right now. All right. So anyway, the points that I want to make is that, I am the queen of multitasking. I could do a million things at one time. Yes, US data could really, if it misses even a little bit, could really send the dollar tumbling on just profit taking. And so ISM services could miss. But the real potential miss is really in non-farm payrolls because Powell has warned that the US jobs data could be overstated. And I know, for many people I speak to in the US that anecdotally, Americans are not feeling as confident about their jobs, which is why they, and about their economic situation, which is why they elected Trump for a second term, because they don't feel good about what's happening right now. So they want things to change in the future. And that is why they elected Trump. And yet the data has not shown that things are not good right now. And so, there is a possibility that non-farm payrolls could miss. What is most interesting, though, I think, is the Fed minutes, because the Fed minutes changed a lot. The last Fed minutes that we had showed the Fed looking for only 2 interest rate cuts in 2025, which is very little. Think about it. ECB, Euro, is looking for 100 basis points. UK is looking for 60 basis points. Aussie is looking for 80 basis points. US, only 50 basis points of easing expected in 2025. So only 50 basis points of easing expected this year. Why? What changed their minds? The Fed initially was really focused on the labor market and the economy, which is why they cut interest rates, as much as they did, and so aggressively with their first interest rate cut in 2024. But now they're, and at the time they thought inflation was going to come down, but now they're telling us inflation is probably not going to come down as much as they had anticipated. And that shift in view is expected to be reflected in the Fed minutes. So the Fed minutes, I think, is in many ways more important than non-farm payrolls. I think it's more important than non-farm payrolls because it could reveal the motivation for why these Fed presidents don't think that they need to cut interest rates aggressively this year, and that maybe they could even pause in January. We'll look at the Fed fund futures in a minute, because inflation is truly a problem and could remain sticky and could remain where it is with the tariffs that President Trump is promising for 2025. So the Fed minutes, if it indicates a pause, sticky inflation, increased worries about inflation this year, that could overshadow the jobs report, especially if the jobs report just kind of comes out in line with expectations. I mean, right now, the market is expecting the U.S. jobs report. Got my ad blocker on. Hold on. Okay. What is going on here? All right, calendar. So let's go to the U.S. jobs report. U.S. jobs report. This is what I'm talking about. 154,000 jobs are expected in the month of December. If it comes out 154,000 jobs, do you think that's going to be up dollar or down dollar? Give me an up, a thumbs up, where's my camera, or a thumbs down. If non-farm payrolls comes out 154,000 is 154,000. Is it up dollar or down dollar? Well, it seems like, so far we have answers all over the place. Some of you say down, some of you say up. And I love that. I love that you guys have no idea. I love that I have the opportunity to explain to you what it means. So, first of all, the jobs report is complicated because we have 3 components of the jobs report. We have the non-farm payrolls change, actually 4 components of the job report. We have non-farm payrolls, the absolute amount of job growth that's happening, average hourly earnings, the unemployment rate, and revisions. So there are 4 things that could affect how the market reacts to non-farm payrolls. The first thing will be the absolute amount of job growth. If it comes in 154,000 And that's it. And everything else, average hourly earnings growth slows, the unemployment rate remains unchanged, and the average hourly earnings growth slows, then, and there are no major revisions to upside, it will probably be initially dollar bearish. Of course, if it's 100, it'd be very dollar bearish. If it's 175, it'd probably be a little bit dollar bullish. But it's not that easy, because that is why, we laid out the scenario beforehand, because we have the Fed minutes released on Wednesday. We have ISM services on Tuesday. In some ways, John C. is right. It doesn't really matter what the data is about. It's all about what the market hopes for in the future. And that hope is partially due to Trump. It's partially due to the Fed minutes. And Naxaris is absolutely right. It's going to be two-sided. So the game plan, what's going to happen is that if the Fed minutes is less dovish, and most of the Fed minutes show inflation being sticky, the Fed really positive on the labor market, and worried about inflation sticking up too much, and confirms and reminds the market in this new year, after everyone's taken off for a week, 2 weeks, that they could pause in January, that only 50 basis points of rate cuts they feel are needed this year. That is going to overshadow 154,000 print. So we may only see a little bit of a drop in the dollar before it rebounds again. Because if ISM services isn't terrible or is strong like the market expects ISM services, where's this, to jump quite a bit from 52.3 to 55.4. As long as it's above 52.3 at 53, 54, 55, it's going to be good for the dollar come Friday. It may not be good for the dollar that day, but it's going to be good for the dollar come Friday. And then on Wednesday, if we have a less dovish FOMC minutes, which we should, because the FOMC statement was less dovish and the dot plot was less dovish. If we get that, then a 154,000 print will probably drop the dollar a little bit before it pops up again. Now, on the flip side, if the FOMC minutes show a bit of wishy-washiness and it's not clear, and there's just as much optimism as there's concerns, then a weak NFP report will probably have more teeth. It'll probably lead to a more significant decline in the dollar, especially if average hourly earnings growth slows and the unemployment rate increases. So most likely, because the dot plot did notch upwards, because ISM services is expected to be better, it is what many of you said, which is that, the NFP report, if it's stronger, could actually be positive for the dollar. And it could actually lead to a little bit of dollar gains, like all of you are suggesting. And it may not be, a weak number may not be bearish for the dollar, unless it is very weak, like 100, 125,000, and average hourly earnings growth slows to 0.2. For all of these reasons, that is why non-farm payrolls is best traded reactively, meaning that after the number is released. And we will be live trading non-farm payrolls with you on Friday. I'll post a link later on. We'll put it on our live stream. It is best traded reactively, and we'll be doing all of that with you on Friday. Ahead of it, though, I still think, the dollar today, tomorrow before ISM is going to trade with a negative bias. And then ISM may drop it a little bit, depending upon, whether it can match that high expectation. And so in the beginning of the week, I think the dollar could trade with a little bit of a negative bias. But at the end of the day, I think it's going to be up to the Fed minutes. I think the Fed minutes are going to be more positive than negative for the dollar. And I think that's going to carry over and overshadow the non-farm payrolls report. So does that make sense? If it makes sense, give me a green heart if you're ready to make some money with that information as we live trade NFPs on Friday. Okay, so what about the euro? The euro is, up today, but I'm still bearish. As I said at the start of our stream, the ECB is expected to be the most aggressive central bank with cutting interest rates this year. So they are expected to cut interest rates the most aggressively this year. And so that is going to be a problem for the euro. Yes, euro is up today because the dollar is down, and it shows to all of you how the market's appetite for dollars matters more than anything else. We have a lot of political uncertainty. We'll talk about that a lot, this month. But in general, we are looking for the ECB to be the most bearish. And that is why I think euro is not only bearish against the dollar, but against all of the other major currencies. But while I have a view, we have to respect the price action. And so we'll keep an eye on it. But overall, I'm bearish euros. We did have some upward revisions in Eurozone PMIs this week. The most important piece of data for Eurozone this week is going to be the inflation data. And the inflation data.
Sorry, I'm just going to break in for a second. Stocks are tumbling because Trump just denied the Washington Post tariff story, meaning that, Washington Post came out saying tariffs aren't going to be as bad. That created a big rally in risk. And Trump just basically said it's all nonsense. Welcome to the Trump presidency. You're going to get lots of volatility, but just letting you know, this is the reason why the spike in equities just happened. All right, I'll let KK go back to.
Wait, the spike in equities or the tumbling of equities? You said stocks are tumbling.
The tumbling, the downward spike. The downward spike.
So we're seeing. So I've got my quotes are a little delayed here. Let's see the US 30 for a minute to see how much of an impact this has had. Where's my mouse? And you're seeing that we are, the market reacts to news, and Boris is right with the Washington Post story that we had. And I'll give them the opportunity to elaborate. And tariffs are, Trump hasn't even taken office yet. And, the headlines are impacting the markets quite a bit. And I think it's something that, we'll all become very, very familiar with. How is it impacting, currencies? You can see that's leading to pop in the dollar. Tariffs is good for the dollar, keeps everything domestic. It's bad for the euro. And of course, it's bad for the Canadian dollar, the countries that are probably the most affected by the tariffs. So I'm bearish euros, and the prospect kind of justifies that. So basically, Eurozone inflation data is the most important piece of data this week. And that's happening tomorrow. Inflation numbers are expected to actually be still a little hot. We'll have to see whether that remains the case or not. Let's look at this. Eurozone inflation data. It's supposed to show inflation is the problem for the Eurozone. Sorry, inflation to upside is a problem for the Eurozone, but it's not as much of a problem as the political situation, the tariffs, and growth. And Sweetwater is absolutely right. Every single tweet he puts out, or it's not a tweet anymore, right? It's on Truth Social. But every headline about Trump and his views is going to lead to these huge spikes in the market, and we've got to get used to it. So sterling, I'm also bearish sterling with downward revisions to UK PMIs earlier this morning. And so that hasn't affected sterling at all. But Bank of England is expected to get more aggressive with cutting interest rates this week. We have no major UK data this week at all. So it's going to trade exclusively on the market's appetite for dollars. But we did have the downward revision in the UK PMIs, and sterling is up today because the dollar is lower. But overall, I'm still bearish. Aussie, we also have Australian inflation data, Australian retail sales data and that is expected to come out later on in the week. We did have stronger PMIs, so those numbers could be firmer, and we had stronger Chinese PMIs and the RBA, even though they did not cut interest rates at all in 2024. They are expected to cut interest rates in 2025. So it will be something that we're all paying attention to. And it will be something that is very, very much market moving for the Aussie. We have one of our, Daniel here is saying that we shall need a new trading plan for the Trump era. Yes and no. Some of you may have not traded during Trump's first term, but we have been here and we have traded Trump's first term. And it was a very, very good few years for Zip as well. So Zip has traded, my trading strategy has traded throughout Trump's first term, obviously throughout the Biden presidency and then into the Trump presidency. And so it's not about, yes, we have to be more careful with these huge spikes, but that is why, we have, that's why I like to trade with the first target and second target, because, sometimes it comes in a big move, sometimes it doesn't. And we'll be able to trade a little bit more carefully. But just because, we are in a regime where, Trump could be tweeting from his toilet at 8, 9, 10 p.m. New York time. And so, the Asia session could be more active than usual. It doesn't mean that we won't have, some good opportunities, as long as we know which way, he's leaning in general, which, where, he is much more focused on, and what the possibilities are in terms of tariffs, trade war, and things like that. So Canada, the other big story this week is that Prime Minister Trudeau could resign at any moment. He could resign today, he could resign tomorrow, he could resign by Wednesday before some sort of big meeting that they have. He has not, it's believed that he hasn't made his final decision about whether or not he's going to resign, but it's making the headlines. His the polls have plunged as a result of how he's been handling President Trump and the threats from Trump's tariffs. And it's believed that he could resign this week because they have a big national caucus on Wednesday. But once again, the final decision has been made. This is also a big week for the Canadian dollar. We have jobs report, we have IV PMI, all of that is very, very important. And of course, the political situation. So right now, CAD is rallying, but I'm neutral bearish to the Canadian dollar. And I think the markets, typically when we have these political messes, it tends to be initially negative for the currency and then maybe, some gains. Yes, the announcement is possibly Wednesday because ahead of this national caucus, but it could come sooner. So I'm neutral bearish Canadian dollars, also because we have so much Canadian data this week. Now, Kiwi, I'm also bearish, but, it's more going to, there's nothing really going on for New Zealand at all. So it's kind of like Aussie, where it's really going to trade on the market's appetite for US dollars. So keep an eye on that. Swiss franc, we had Swiss retail sales come out this morning. It was very weak. And so, Swiss data has been very weak. They cut interest rates by 50 basis points in December. They're expected to continue to cut interest rates. They're willing to go to zero to negative rates. They told us that. I think it's very likely. And so, that is also something that I'll be watching very closely for. And then last but certainly not least, the yen. I'm still bullish yen overall because Governor Ueda has made it clear that they are looking to raise interest rates this year, and they continue to believe that, and they continue to tell the market that, and so I do believe that that's going to be a theme this year, and so keep an eye out for that because it is certainly something that is on everyone's radar. All right, so with that, what I will do now is we'll run through the calendar quickly just to go over some of the key data. As I said, Swiss retail sales came in weaker, so that should be reinforcing the idea that SNB will continue to cut interest rates. We had upward revisions to Eurozone PMIs, which is positive for the euro. We have nothing from the US today. Tonight we have Australian building permits, not a huge market mover. Tomorrow, the main focus is going to be twofold, which is going to be actually threefold. Eurozone PMIs, which are expected to be stronger, although I think there's some risk to the downside. We also have IV PMI from Canada. That is also expected to be stronger as well. And we have US ISM services, which is expected to be stronger. And then on Wednesday, German retail sales, everyone's going to be watching that. That is expected to be better. ADP is expected to be weaker. And then we have the Fed minutes. Those are the top 3 reports that I'll be watching on Wednesday. On Thursday, we have Australian retail sales. Another good number is expected because labor market's really good. Chinese PMIs, German industrial production numbers, so mostly stronger numbers expected abroad, coming off of lower bases. And then nothing for the U.S. Aside from ADP worth watching. And then on Friday, we have CAD jobs numbers. Weaker job growth is expected for Canada. And we have U.S. non-farm payrolls numbers where weaker job growth is expected as well. Once again, we will be live trading that with you. So I encourage you to join us. And then Boris, if you don't mind dropping in the top 10 trades for 2025, we're going to be, if you want to know what our top 10 trades for 2025 are, I invite you to join us for our webinar on Saturday, January 18th. Make sure you register for that. It's going to be a great event. I'm going to repost the link. Yes, you're right. You're right, Denise. Let me share Denise's comments. Markets are closed on Thursday for Carter's memorial. So that's something that, will be less in terms of market volatility because the U.S. stock markets are closed. Let me reshare this top 10 trades of 2025. Here we go. Top 10 trades of 2025. Click on that link to register for that event. All right. So taking a look at the charts quickly before I turn it over for Boris for trading. Looking at dollar yen, you can see dollar yen is consolidating near the highs. I think that, dollar is obviously rallying off of Trump's denial of the article in Washington Post about the tariffs, but there is a lot of resistance right here, a lot of moving average resistance. And so I think that, with these tweets, usually the reaction is short-lived. So I think I'll still find some resistance here. I still expect dollar yen to maybe come down, test the 20 SMA before moving back, before attracting buyers and moving back up. Euro, it's rejected the 20 moving average. These moving averages matter. I'm overall bearish euros. I think it's going to underperform, particularly against the crosses. So I still think euro is going to head lower, although I think, we could see a little bit more gains before it heads lower. Sterling is also bouncing a little bit. My overall view is bearish. But once again, I think we could see a little bit of more profit taking in the dollar ahead of the ISM data as well as FOMC minutes. And then the FOMC minutes, I think, is going to be dollar positive, which could drive the greenback higher. Dollar Swiss looks like we could have a little bit more of a pullback here up to the 20 SMA, and then maybe a recovery from there. We already talked about dollar yen. Aussie is probably a bit more positive than the other major currencies, forming a bit of a base here. I think we'll retest the 20 SMA again. But we've got a lot of data this week. Dollar CAD is the most interesting to me. It definitely looks like it's rolling over. This is a huge red candle. I still think that we've got a lot of issues with the CAD, so I'm neutral. But on a technical basis, I think we'll come down a little bit more before we move back up and those buyers come back in. But we have a lot of data. And so I think, focusing more on the shorter term will be more valuable before we get some insight on where the longer term directions are. All right. So, welcome everyone who's new. Thank you everyone for participating. Boris, you want to say hello? Charlie makes a good point. Tariffs are often inflationary, but right now we're having some weakness in the employment sector, so that may make the U.S. lead to cuts. If you look at the CME Fed Watch tool, you will see that the market is pricing in 90% chance of no rate cut in January. And I think it's possible. I think it's likely. I think we'll see a pause in January before Trump takes office, and we see, kind of the Fed reassess how things are and look to cut interest rates again. And so market expectations are very important to take into play, and I will keep you all updated on that every single week. So 2 things that I want to remind you of. 3 things that I want to remind you of, which is that, the most important pieces of data this week are going to be NFP, Fed minutes, and ISM services. So make sure that you are on top of that. Also, make sure you register for our top 10 trades of 2025. And that's going to be on Saturday, January 18th. It's not going to be streamed on YouTube or Twitter. It's just going to be a live webinar.
Right. So make sure you register. Even if you can't attend, if you register, we'll send you the recording. If you don't register, you'll never be able to see the webinar. So make sure you register. Very, very important.
And the last thing is that we will be live trading non-farm payrolls with you on Friday. I haven't posted the link on YouTube yet, but I will later today. And so make sure you look out for that.
Yeah.
Otherwise,
and as Kathy was saying, there's no trading on Thursday. I will not be trading at all Thursday because markets are closed in the U.S. on the equity side. So we'll be only trading tomorrow and Wednesday on the live side on the equity side.
And then we'll be live trading with you on Friday. And I'm sure
right.
Boris will be trading gold as well as equities on Friday morning as well.
Right.
So you register. I'll pop on the link again to register for top 10 trades. And so, in the meantime, Boris, fire away.
Okay. Okay, I'm gonna knock you out of the screen if because I have a new layout that I'm gonna start using with people. So hang on just one second. Let me just organize myself here. Show and this. Wait, me. No, remote add. Okay, cool. All right, guys. Hi. Let me make sure I'm presenting my screen. Why is my screen not showing? Stop screen. Oh, wait, hold on. Present, share screen, window, this one. Okay, share. All right, cool. Yeah, as you can see, hi guys, hi. Everybody give me sound check, mic check, screen check, all good. Thumbs up in the chat. I want to make sure that everybody is good on everything. And okay, where am I now? So 234. Okay, I am triple short gold right now off of a strong sell signal here. We'll see if it works. I got to watch this trade a little bit here for a second, and I'll explain everything that I'm doing. Here we go. I'm just going to exit out. All right, very good. All right, I got out of the gold trade. Okay, so thumbs up on everything. Denise, Cheryl, Chuck, everybody. Guys, I have the coolest things to share with you now that we're back. I'm going to show you over the Christmas vacation the one trick I discovered that made almost all my trades bankable, meaning all of them all resolvable. Let's also just look at my layout. Everybody was asking me, how do I trade so fast? How do I get into all my trades so accurately? Boom. What am I doing that causes me the least amount of stress and the most amount of effectiveness as far as all my trades? Just like, for example, how did I manage to resolve this gold trade for $50 to myself in the last 10 seconds while I was talking to you, even though I was triple shorted to the trade? So this is my trade of 8 backup. This is from Apex Trader Funding. Guys, be sure to get an account with Apex if you don't have one. This is what we use. It's actually I have the wrong. It's now 50% discount. But anyways, use the code BKSave. Take the screenshot there. It's really valuable to have the Apex trades. So Apex, I use Trade of 8 as my broker of choice on Apex because it's web-based. I can use it on Mac, I can use it on PC, and I can even use it on my iPhone, which I occasionally do if I need to settle up trades on my iPhone, which is really cool. And my whole approach, before we even look at my signals, my structures, my particular BK scalper indicator, which I rewrote over the Christmas vacation, which is a really, really good, and I'm going to rewrite it even more to make it even simpler. Before we do all that, you have to understand that I am always, always, always trading in what I call a probability envelope. My first trade is never my last trade. I'm always entering first trade. If I have to second trade, I have to. If the first trade works, great. But if I have to, I enter second trade and I have to enter third trade. I give myself 3 chances on every single trade cycle to make money, which is how I make money all the time. That's why you see me putting a P&L on every single green day. As a matter of fact, I'll share my P&Ls with you guys tomorrow if you want. Every single day, with the exception of Sundays, we're green in December. Every single day, with the exception of Sundays, we're green in November. So it was a 95% green day structure. And this is what I do. So the most important thing for those of you who are new, who want to understand how is it that I'm consistently winning all the time, has nothing to do with how I choose trades. It has everything to do with how I manage trades. So those of you who are asking me, what is it that I'm doing? I have three separate order entry structures, right? And I'm always entering quantity 1, quantity 2, quantity 4 in all of these entries as my trade. So I'm going to go market into a position. That'll be my quantity 1. Then I'm going to go limit at whatever separation I have. So in gold, it's going to be $3 separation. In NASDAQ, it's going to be 20-point separation. In the S&P, it'll be a 4-point separation, right? So I will go in these incremental ladders up the thing, and I will lay out all these orders. And if those orders are hit, like you see in gold over here, everyone, see, I got short, boom, I bought everything back. Short, boom, I buy everything back. Doing it this way is what makes me money, because this is 1, this is 2, this is 4. So it has to go just a tiny bit my way. Everything turns profitable. So I make money by making sure that I give myself the best possibility chance of turning profitable on every single trade cycle. Now, once I do that, I close the position. In Tradeovate, there's this button that says exit and market and cancel. Once I hit that button, every single trade I have out there in gold is going to get canceled. So there's no hanging orders. There's nothing out there. It's a super simple structure. I laid in, I stagger my orders, and then I get the hell out. I do this over and over and over again, right? I can do this 10 times per instrument or 30 times a day. You can imagine how profitable that could be on a day-to-day basis as far as scalping. So this is a way for you to see the back end. You don't see this very often because I'm entering on charts, and you don't see me actually doing the structures. But that is what I'm doing. I'm just laying them out, and I'm happy to. If we find a trade that makes sense, I'm happy to trade it with you as we go. As a matter of fact, since we're looking at gold here, we have a trade reversal trade here in gold. Might as well buy this one. Let's do this. Okay, I'm gonna buy gold here on a reversal basis. I'll explain the structure behind this stuff. 38.1. Now what I'm gonna do is 35.1 will be my second level over here, and then below that will be 33.1, right over here, and I'll be buying that. And and we'll see if this trade works out. Now, why did I buy this trade? What's the sort of like the one thing that I kind of discovered over the Christmas break. This isn't the great trade, by the way. I don't really love this trade, but whatever. I want to show you the structures. So if I have to eat the loss on this, I'll eat it just to show you the entries. What I discovered over the Christmas break that absolutely made just massive accuracy gains in across every single setup I have is I do not trigger off my signals. My signals is a signal. This becomes the trade. So let me explain to you what I mean. Here's a signal that says to me, prices are super oversold. the price is stretched away from the short-term moving average by more than 10 basis points, it's like a rubber band that's way, way, way oversold, right? Generally, the idea was, okay, this is a signal, let's go buy it. No, that's not the signal. That's not the trade. That's a signal. You know what the trade is? The trade is the moment the price shows me that it can cross into the green territory. I'm looking to be a buyer. So what I've started doing is I look at the signal and then I wait for the trade, right? So the trade becomes over here and it'll be, buy over here, and you be coming in on the trade. This makes a huge difference on reversal trades because you don't commit to a reversal trade until you can. Shit, I'm sorry. I got to watch this trade for a second. I got to figure out what the fuck I'm at. Hang on. Really, I want to get the fuck out of this trade. So, all right, sorry. Fuck. All right, I think this trade is gonna torture us to the downside. All right, I might have to eat this trade. Anyways, the point being is, you only want to commit to a trade when it crosses the short-term moving average in the direction you want to trade. So if you get a sell set up to the upside, that's a signal. Once it goes into the red zone, once it starts going through the moving average, that's a trade. If you just stick to this one simple rule, you will never, ever, ever. Let me get out of this fucking trade. Exit. Okay. All right, I'm out of this stupid gold trade. I didn't want to be in this trade. The reason why I didn't want to be in this trade here is the real reversals, the good reversals were like over here, right? You had a massive decline, big decline. This was a reversal. This was a signal reversal. The entry was right over here. The entry was over here to go long. If you just simply give me some thumbs up, and you guys tell me that you understand that there is the signal, and then there's the trade, and the trade only occurs once price goes into either positive territory or negative territory. And I had a fuck ton of trades here in the other account. Let me show you. Let's go to the other account that kind of show you a lot of this. Okay, here's a great example. This is like the classic example. It's very, very clean. There's not a million different things on the chart. Okay, everybody sees this trade. Okay, this is the classic. I love this. This is like the bread and butter trade that I absolutely am 1,000,000% to 1,000,000,000% confident is going to improve your trading, right? So here's my structure, my BFF scalper. It's telling me, holy shit, this is grossly oversold. Look at this, it's diving. The distance from A to SMA is super wide. You have a blue candle giving you a signal. That is not the trade. That's not the trade. The trade is we cross into the green territory. That's the trade. Right over here. Even though you're late, you have a much higher chance of success, because you know what's going to happen sometimes? It's going to go redder, and it's going to go redder. It's going to go redder. It's going to go so fucking red that you're going to be crying like a little bitch because it can get much more oversold. The signals are just the analytical framework for a possible trade setup. The actual price action is the trade setup. Once you get into that mindset, it's unbelievable how strong and valuable that kind of a structure is, right? So like right now, nothing much is happening right now. These are reversal setups. I'm gonna tell you the exact same approach on trend setups. Now, I am horrible at trading trend. I'm forcing myself to trade trend with you guys because everybody loves to trade trend. I allocated one account for doing nothing but trading trend, right? Still sucks, but I will do it with you. But if you're gonna do trend, same idea, exact same idea that you want to trade. And I'm going to explain to you how I would trade trend now under my new methodology or my new philosophy. So we have a trend signal, right? We have a trend signal. And first of all, I would only trade. Now, if I'm trading trend, I would only trade after the first trend signal. So the moving averages crossover, we have a trend signal, right? That's not the trade. The trade would be the next green wave. The next green wave, the second green wave after the moving averages crossover, that's your buy. So my buy would be 40.50, and actually, I would have made money here, obviously, if I took the trend to the upside. After that, I'm leaving it alone. I mean, you could play with it. You could try to trade the next wave up, as long as the waves go up and the slope of the moving average on the 8 period is good. Yes, it's all fine. But gold spiked out. Nice. I mean, I was on the long side of gold, so it all worked out for me. But I just gold requires its own dedication right now, which I can't give you. But regardless of whether you are going to be a trend committed trader or a counter trend committed trader, the most important thing in terms of your 2025 being a million times more profitable on the scalp side is just wait for the green wave if you're long, wait for the red wave if you're short. Don't commit until you get a moving average crossover. So signal first. It's not like moving average crossover is of any value. It's not like signals of any value, but it's the combination. It's the 1-2 tap dance. That's the killer dance. Okay? So everybody understand what I'm saying. Everybody understand why this is so much better way of trading. It's going to give you far fewer trades. You see, I'm doing nothing. I'm going to be sitting here twiddling my thumbs half the time with you. But when I move, I'm going to be making money. It just makes a huge difference when you're approaching trades this way. Right. It also gives you lots and lots of time because you have the pre-setup and then you have the entry setup. You have to run like a crazy person into every single setup. The dashboard, everything looks really great. Like right now, look, we're 10 basis points away from the 8 SMA. See how this thing turns? It's going to turn red. Let me see if the Nasdaq is going to turn red. Maybe. No. So Nasdaq is wide. So Nasdaq is really, really wide over here, right? That's already telling you, okay, we're getting into a little bit of overbought territory on Nasdaq, right? Although here's my other example. Like my perfect trade, I want to show you my perfect trend trade is we get crossed into the moving averages. Then the second green wave is my trade. If I don't have a second green wave, there's no trade. But it's the second green wave. I would have been long here on Nasdaq too. That would have been a great, beautiful trade to take. Now we're kind of getting wide, right? And here's what I'm going to be watching for. Once we get a wide, the reversal labels are going to start printing. Now, once the reversal label starts printing, that's just the beginning. It's not the trade. It's only once you get the red move, the red wave, that's when you begin the trade on the reversal side. Okay? That's the idea. As long as you kind of stutter step your way through this, you will be so much better this year as far as scalping. Everybody vibing me? Can I have some vibe emojis, please, in the chat? I'm telling you guys, this is gold. We're going to see such positive results this year by trading it this way. I'm already basically up today. I'm trying to get to, through about $300 on each account, just sort of very, very smooth, very careful. The other thing that I really committed myself, my New Year's Eve resolution, let's see how long it's going to take before I break it, is I am never trading the large contract again. I'm not trading. I'm just gonna. If I get killed on the micros, I'm gonna eat the loss. It actually happened to me. I got killed on the micros on a new spike over the Christmas break. It took me a whopping 3 hours to work back the loss. It's not, as long as you stick to the strategy, it's super easy to work back the loss. So really, really cool. Yeah, well, Denise we'll see how long I last, but that's definitely the intent. By the way, do you guys like the new screen setup? I think it's much easier to watch, right? Like it's easier to see the charts, I think. So this is another good example. So this is obviously a reversal signal, and this is the super trend sell signal. It's telling you, oh, you're in a deep downtrend, and now you're spiking against it, right? Now, again, my former self would have said, ooh, let's just short the fuck out of this thing. Let's just short here, short here, short here. No, think about how much better it is for you to be patient. Yes, you're going to be late, but you sell the 36s. Okay, it goes up, it goes up, it goes up, and then it kind of drops back down, and you resolve it right over here. You're just in a much better mental and financial state to be able to manage this thing, right? And I'm actually going to try to make all of this a lot easier. I'm gonna have to think a little bit about the UI, so it's not so so busy. But I'm going to try to see how we could say this is a signal and this is the trade. Maybe we're going to have some kind of a dollar signal for the trade. Maybe I'll put a character of, maybe I'll put a dollar mark or target mark. Maybe it's actually, let me leave it up to you. What do you think would be a better signal as this meaning this candle we want to take the trade, not just look at the signals. Like, would it be, should we use target? Like, should I use this as my signal? What would be the most intuitive thing to do, for you guys to see on the chart as a trade signal, as a trade trigger signal? Or maybe dollar. Maybe this. Let me know what you guys think. So yeah, gold is, everything reversing, everything kind of coming back now. S&P coming back to the positive territory. NASDAQ back up in positive territory. Okay, here's a cool thing. Shit, I kind of just missed it a little bit. So fine, we missed. This was a sell setup, and no, actually we didn't miss it. Let's do this. We're going to try and sell the S&P now. The NASDAQ. Sell market. Okay, where am I now on my market? 814, and I got to go. Oof, this is going to be a lot of work. 34s, 34.50. Wait. Ooh, sell market. All right, now do 2, and then 4 would be 54.50. Well, I'm really going to get this 54.50 on this. Wow, this is really running against me. It's a big move here. Now Trump lines. Where's my thing? Is this, which trade of 8 am I in? Oh, I'm in the wrong trade of 8. I'm in the 42s. Okay, I'm in the 42s. Oh, look at this. And look at this. Look at this. I'm on positive. Exit. 50. There we go. $40 made on a super fast way. Sorry, guys. I can't talk and chew gum at the same time. But here, this was the crazy ass move here, right? I took the short over here because this was a red confirmation. Then, of course, we had a big ass spike where I couldn't, I had to lay out all these orders within 1 minute. So I sold the 1, I sold the 2, came right back down, covered everything back up for a plus 30. Do this all day long, any day. Oh, the rocket. Cheryl suggesting the rocket. I guess I like the rocket. Yeah, we can do the rocket as a trade trigger entry. That's a good idea. So we'll do. So like what would have been here is what's going to come up on the chart is this is going to be the rocket. This would have been the rocket. And I'm actually going to, these labels I think I'm going to just kind of get rid of and maybe just, I don't need to say sell setup. I can just say, I can just leave this as a downward arrow like this in a label. Just because the chart gets very, very crowded, and I don't want to do it. Anyways, everybody follow what I just did there. Anybody trade the crazy ass move in the Nasdaq with me right now? Why do we trade this? Let's understand why we traded this. For those of you who are new, who don't understand how we make money scalping. So we have a proprietary indicator, which is now, by the way, invite only. So you want it, you got to come and join me at BK. I can't, and once you do, it's totally, it's totally yours. You can have a good time with it. And I'm actually, guys, a little preview of things to come. I may be able to get this on MetaTrader 5. I'm getting close. We're getting close to the coding. It's a massive pain in the ass to translate all this logic into MetaTrader 5, but we're getting close, and it's really cool actually, because I've made a lot of progress, and I'll let you know. But for those of you who just want to trade this manually, like we do for Apex, what we do is the following. We have the large moving average, the short-term moving average. The large one is the 200. The short-term is the 8-period moving average. We have a 1-minute chart. We're always trading off the 1-minute chart. We trade 3 things: Nasdaq, gold, S&P, and the futures. If you're trading CFDs, you can trade Nasdaq, US 30, gold. Same thing. Big difference. We have a whole bunch of signals on this chart, for which I'm not going to go through right now. For which I made a full video, which you can watch. But the general idea is, yes, 1.1, exactly, 1.1, this one, Tony. If you have the invite to it, it's there. And once you're invited into this thing, any fresh update will automatically update the indicator, right? So you need to, if you're a member of BK, ask Boris. Just there's a form. You just need to fill out a form, and I will get you down there. No, you have to fill out the form, Tony, and I will send you an invite. And I will automatically put it into your invite only folder. You're gonna go. It's gonna be in your invite only folders. Okay, it's gonna be this one. It's gonna call it BK BFF Scalper. That's the one it's called. It's gonna be there once I give you permission for it. Okay. You can ask me, guys, after the show. You can ask me after the show, because we have a lot of people who are not members, so I don't want to get into like all the membership arcana with this. So for those of you who are not members, who are just learning how to trade and learning how to scalp with me, we have short-term, long-term moving averages, right? One of our rules is if the short-term gets 30 basis points, that's 0.3% above the long term, it gets stretched out. That is a warning sign for us. That is just a warning sign for us. Hey, prices are oversold in the short term. We're always studying things from a price perspective, right? Reversal and counter trend is the exact same thing, Peter. It's 2 words for the same bullshit idea, which is another reason why I kind of want to get rid of, I need to synchronize. There's just trend and counter trend. There's nothing else in trading. You can either buy and think it goes higher, or you can buy and think it goes lower. It's the same shit. There's just no other trades ever. It's the only 2 trades in trading ever, okay? It's a very, very binary business. So once we get up to this level, right, this tells us all sorts of interesting things in the dashboard, in the things, and it starts to print signals to us that potentially there could be a sell counter trend trade. Now, all we do is we say, once we get the signal, we say, oh, now here's the signal. We say, oh, once trade goes red, meaning once price breaks the moving average, we're going to get into our position. And I got into our position here. I got a position here. I got into 2 times instead of 3 times. And then it, boom, completely collapsed on us and came in. All right. Okay, I'm going to make my one nerdy quantum mechanics analogy here, but you will all understand it, and you will all understand why this thing works. So regular investing, regular trading, even fucking, like swing trading that other people do, is very much like Newtonian physics. It's like 1 entry, 1 exit. That's why all these guys do 1 trade a day, and they only enter once. and they always say never enter again. And they give you all sorts of rules, none of which shit applies, because just like none of the rules of Newtonian physics apply on a quantum scale, none of the trading tools that everybody else teaches you apply on a scalping scale. Scalping is like quantum mechanics. Now, quantum mechanics is all about never having one precise value. It's about having a probability envelope. It's about having a massive amount of possibilities, kind of like a lots and lots and lots of chances into one single reality, right? So when I go enter 1, enter 2, enter 3, I'm essentially emulating a probability envelope. First scenario doesn't work. I try the second scenario, I try the third scenario. I have like 3 scenarios, and then all of them, now probability function collapses when you observe something. It collapses into a single point. That's how quantum mechanics and Newtonian mechanics come together. Same thing in scalping. Once all these 3 things come in, they collapse into a single point of profit. Okay? That's basically how you want to think about what I do. That's why it's interesting. That's why it's successful. That's why it's very, very unique in terms of what you probably are seeing on YouTube. So tell all your friends to come in and come hang out with us, because we do something very different from everybody else. I don't do bullshit ICT, which is nothing more than double tops and double bottoms, disguised as something interesting and valuable, which it isn't. Okay. I don't do average weighted volume, because again, it's, everybody else does it. We're doing something very unique, very interesting, that really comes out of like the fact that I used to work for market makers long, long time ago. And this is, market makers always make money, or dealers always make money, because they do these things intuitively. So hopefully you guys like this, and I hope you bring everybody around, all your friends. We do this every day of the week practically on YouTube. I do it Monday with Kathy, after Kathy, and then we're going to do Tuesday, Wednesday, Thursday on regular days, except this week we're doing Tuesday, Wednesday, Thursday we're not doing it, and then we do occasionally live trades like with Friday's live NFP. So come join me. I will be happy to hang out with you and show you all the stuff. Okay. More selling stress over here, but we already made our first resolution. And frankly, I'm watching this. Now, here's the thing that will flip your mind. Yes, I'm a counter trend trader, but I'm not, I'm not stupid. If you're a trend trader, you can easily reverse all of these reasons to your side. You can say, hey, this thing is super strong trend now, right? And if it's super strong trend, what I want to do is, if I get this sell signal and the price goes green, I actually want to go long, because that means that there's more momentum to the upside. So if you're a trend trader, your entry would have been on this trade over here at 17, and you would have made tons of money here, right? Going straight up. So you can milk it to the upside. It all depends on whether you like to go with the flow or go against the flow. As you can imagine, you can clearly see I'm not a consensus person. I don't necessarily like to go with the crowd, but that's just my personality. It doesn't mean that you can't use my techniques to do the exact opposite of what I do. As a matter of fact, lots of guys in my room do the exact opposite of what I do. They trade trend with my indicators, and they make a ton more money than I do. So it all depends on what you're good at and what you're trading. The other thing I was going to say to you guys is I really want to trade more into the 11 o'clock hour with you guys. Time permitting, my schedule permitting, I really want to trade the 10 to 11 o'clock hour with you in 2025, and we'll see how that goes, because I think there's a lot more opportunities in the 10 11 hour that very often I'm off screen and I'm doing a lot of trades here that show up that they want to get a chance to take. So we may be doing less trades, but maybe doing more time here as we go forward. Does the RSI work on small time frames? Just curious. Interesting. The answer again is that it works great if you're in the right environment. So like I actually created an RSI robot yesterday on MT5, testing it on the pound and on yen. Right. So you want to know what the results were. It's kind of really, really interesting. So I just did a very, very classic test. I was like, I'm going to sell 70s, buy 30s, or I'm going to buy 70s, sell 30s. So if you were trading pound, which was a very range bound currency last year, like in the last 3 or 4 months of the year, especially, selling 70s, buying 30s was just money, money, money. It made on risking 1%, it made 10% in 3 months. Really, really good results, right? If you did that on the yen, you got yourself killed. But if you bought the 70s, sold the 30s, if you essentially turn RSI into a momentum indicator, which it can be, it worked like a charm. So the answer, Sweetwater, isn't like whether RSI works. The answer is yes, it works as long as you can read the general trend. If you have a positive view, like if you thought yen was going to be continue trending, which it really was pretty interesting. Yeah, you made money. If you thought, cable was going to be churned, yes. Like I think euro is going to be churned for the first 3 months. Like I think euro sell 70s, buy 30s is going to be a great trade for the next 3 months, right? So anyway, it's cool. It definitely. The point being is like there's never one answer, but there is always a right answer as long as you find the right, right regime, which is kind of cool. All right, what do you guys want? My coaching course is going to restart. I don't know if I'm going to restart it tomorrow. I might. I have to think about this. But we're definitely going to restart the winter session. We just killed the autumn session, the fall session, and we're going to restart. Sorry, I gave you the wrong link. It's PTP. I gave you the link to the program. So my Past the Prop Academy. If you guys are interested in coaching and sort of like really, really getting granular and specific in what prop test accounts should we take, what should we do as far as entries, which sessions should we trade, like all the minutia arcana of passing the prop test, which, to let you guys know, 5% of people pass prop test cold. It's less of a chance of success than getting to an Ivy League school. 70% of the people who come with me in the Pass the Prop Academy pass their tests. Then beyond that, after the 5% of people that pass, 1% of those people actually get money and get funded. With me, I think 20% of my students have already got paid out. So the numbers are like 100 times higher than if you were to do this alone. So if you're interested, come join me. You get everything, including Kathy and me on a daily basis, along with my coaching. So it's like coaching plus all of our membership for 3 months. If you like it, be sure to get it. It should be fun. Let me see if I have this actually. Hang on a second. No, I don't have it. I'll make it. I'll make another banner. I thought I had a QR code for it, but I don't have a QR code. I'll make a QR code for tomorrow for this. If you want to just join BK, here's the QR code for BK. You can join that. But the best thing you can do, go get yourself some Apex accounts. Once you get a few of them, then come in and come hang out with me, and we'll try to get those things funded. And that'll be the best fun we have. So what are we watching here? Nothing on the screen popping off for me because I really don't have any signals. S&P is getting close, but not into the. You see, it's still green. No red zones in the S&P. It's very, very contained. There's nothing here. I like to trade extremes. If I don't have extreme values, obviously I don't have any anything to do here. Nasdaq is putzing around. I kind of pussied out on taking the shorts on Nasdaq because I thought it was gonna, as Nasdaq does, is gonna volatile. But taking the shorts here, I could have taken a couple of more short scalps here on Nasdaq. It just Nasdaq really puts a PTSD on you all the time. But take like here's here's a sell signal. I get short over here at 16. 26 would be the next. No, 36 would be the next one. So it'd be like maybe I don't even think I hit 36. You get 16, doesn't even hit 36, comes back down, and you're resolved. Boom. That's a $40 trade right then and there. 5 minutes for $40. The idea is you try and do 10 trades, $200-$300 a day. you're funded within 2 weeks, and then you trade for real. So now, now we're starting. Now, I'm obviously 35 basis points wide. Now I'm starting to run a little bit higher. Now I'm actually kind of interested. It's going to get up here. I'm interested in the next red zone. I will be shorting the next red zone if I can get the next red zone over here. Now here's the cool thing. If the thing is weak, the red zone will come in pretty quickly. If the thing has a monster ramp, it'll go 100 points into the green zone. Great. I don't do shit. I'm not in there. I'm not getting myself killed. I'm not getting plowed over. None of that is happening. Wow. Really, really coming. Oh my God. What's going on? It's 10 o'clock. What's going on? News. Man, there's a lot of volatility in that trade. See, the one thing I will say this is I don't like doing this. I don't like chasing it to the downside like this, because a huge amount of basically the profit that you want. Remember, you start over here at 16 and this thing has already dropped to 86. The whole profit of your trade is already in there. Right now, yeah, maybe it's going to go down even more. Fine. I'd rather give up the opportunity than assume the profit. It looks like it is, there's some kind of news going on over here. I wonder what, let me see if zero hedge. I'm sure Trump is saying something else. Factory orders tumbled. No, nothing else. Nothing really big going on. Just volatility. Okay, so we'll pass this little trade only because it was just a really, really big candle, And again, it all depends. If you're a momentum person, you're like, that's great. That means it's really, really going to go up. But then if it spikes back up like this against you, I don't like to be there. I want to be like somewhere over here so I can take the first trade. There's plenty of setups all throughout the day that we don't have to, take every single possible signal in our direction. Things are getting a little quiet here. I will hang for another 15 minutes. We'll see what goes on. By the way, a really stupid fun project I did over the Christmas break is I had AI write all sorts of trading songs for us, and I'm going to display those trading songs for you. Yes, I'm going to torture you with AI. They're actually kind of funny, kind of good, in all sorts of different styles. I had them do a disco song, a techno song, and a big band song. So I will torture you in every which way possible on this. All right, S&P kind of not doing much. And you see, this is when you have big volatility moves, very often create big counter volatility moves, which is why I don't like to get caught. I like to be in a low volatility candle looking for a big move, not get caught get caught chasing a big move. So now we know. Now we're kind of rallying. We're at 10, 11 points from the SMA, and we're 35 points. So we're double extended, which is really great. Now we can watch carefully, see how far it goes and where it's going to weaken. And when it weakens, that's when we want to come in and enter into it. So NASDAQ is much more subdued, not even into the red zone on either one of the two metrics that we like to use. And gold is pretty quiet too. Oh, you know what? Let's do a poll. I'm just curious. Do you have a prop firm account? I'm curious how many people are you trading prop? So let me know in the poll, because obviously I'm very, very prop centric on this side of it. Those of you who trade MT5 and trade your own accounts, I trade London 4 o'clock in the morning, Bitcoin, gold, NASDAQ, and I got a nice surprise for you there. May not be able to have it for you tomorrow, but it's coming next week. It's going to be a really, really cool new tool for MT5 that's going to create all these all the trades that I'm doing in Trade Evade. It's going to be be even easier to do in MT5. So what we see here, this is interesting, right? We saw this big pop, big stretch, and now we're coming back, right? So let's see what NASDAQ wants to do. A lot of volatility, man. This is, like stretched out away from moving average, now coming back to the moving average. We're going to break the lows here. Well, let's see. Unless it's green, we don't trade it. I mean, unless it's red right now. But again, I'm really I hate the fact that this is a 55, 35, it's a 20-point candle in 1 minute. It's a really big volatility candle. But it's, so far it hasn't broken the SMA, so it's not even an idea for me. Now I want to show you gold. It's actually worthwhile for me to trade this. Let's trade gold here. I'll tell you why. I'll go in a different account. Let's go to 43, and we'll sell gold. Worth a shot here. I'll tell you why. So I'm not a trend trader, but I probably should have waited a little bit. But here's what I like about gold. When I'm trading trend, I always want to be trading when the moving averages are close to each other, right? So that, because the whole idea is trend, that they're going to expand, they're going to really widen out. That's sort of like the prime characteristics of a good trend, right? And the other thing that I want to look at, and this is something a little bit hard to discern until you see it, is I want the slope of the 8 SMA to be negative if I'm short, and I want it to be positive if I'm long. So, I want it to be a downward sloping slope. This is something that guys who trade trend in my room do really, really well, because that tells you that there's potential for continuity to the downside, right? So, I'm a little bit short here. I'll set this up. What am I short? 41.6. Next one would be 44.6, right? 44.6 at twos, and then the last one would be 47.6. Right. Okay. So we'll see if the gold trade works. Here's the gold trade. Now, as I said, I only like to trade trend on the second wave after the crossover, but this is kind of like, a lot of times you'll see the prices come up to the moving average and then come back down and resume the downward trend. If this is sort of the retrace function. So actually the really good trade here on the retrace function would have been like this trade over here, this sell over here. This is the second red wave, the first red wave, second wave, making lower lows on a retrace function. Worth a shot. I came in a little bit late. I should have been coming in at 42.5, so I was like $1 late, but it's still worth a shot here for a trade. Just because I don't have anything else going on here on the let me change to NASDAQ, see what NASDAQ is doing. NASDAQ is still climbing up, so we got no sells on NASDAQ. How do I stay disciplined, not chase candles? I just I wait for my signals, and if I get a big candle, like if I get like you saw me that have that huge downward candle, I just don't take it. I'm not a chaser. You just see my personality is to be on the opposite of the crowd. So if you are a chaser, then you want to make sure. What I was going to say to you, like Todd, you want to make sure you're selling into the red zone and buying into the green zone. That's really the most important thing. Is if you're going to chase, you really want to be confirmed that it's going your way. It's good, on both sides, but definitely, very much worth it your way. Is that clear? Or, have I not explained? I don't think I could explain. I didn't explain myself very well on this, but it's actually a good question. How is it that I'm not a chaser? Oh, all right. So only 50% of you have a prop. That means 50% of you have never traded prop. Now, let me tell you why you want to do that. Even if you have your own account, especially if you have your own account, it's a lot cheaper to trade for $50 a month than to trade for $5,000 a month, right? What I mean by that is an evaluation account is dirt cheap, right? In fact, it's probably like $30 a month. And you get to trade live markets, live prices, and practice all these setups exactly as you would, with the upside being that if you actually succeed, you get to trade real money and get to trade real payouts. It's a perfect complement to somebody who has their own account. It makes you a much better trader. It's like if you're an airline pilot, right? You always go in the simulator. They put the pilots in the simulators every 3 months to sharpen their skills. You should absolutely be trading prop, because at very least it's a simulator. At very worst, at very best, it's a potential money machine for you. So those of you who never discuss, and the point is, it doesn't matter if you don't know anything. It doesn't matter if you unaware. So I'm level 2. So I'm short now, level 2 in the gold at 44s. But we'll see if gold can come back down a little bit here. But like I said, it doesn't matter because it's cheap and it's not your mistakes isn't your own money. Your mistakes don't cost you any money because you're trading virtual funds. But it's just it's a great compliment. So anybody who hasn't tried it, definitely try it. Peter, the profit, stop losses, structures, all of that's really coaching information. It's too complicated to explain to everybody here. I explained to you the structure. Those of you who who've traded the structure, great. If you if you want to come into coaching, then I'll explain. That's what coaching is for that very, very specific stuff. All right, gold looks like it wants to go higher, baby. This whole trend. See, I hate fucking trading trend. Trend is not my friend, but it is what it is. Well, we'll let this trade go. There's nothing else. Oh, I got NASDAQ is. For a second I thought NASDAQ was turning. Let me get into my other account. Let me get into my Fade account. Okay, so now I'm okay. We're short gold. Gold is really, really popping against me now. So I have to try to see if I can get this trade back. But what I was going to say to you is the much more interesting part for me, if I can get into it. So I have the this is my fade account. Let's look at NASDAQ. Is NASDAQ turning red? Oh, yeah, NASDAQ is turned. Okay, let's get in there. NASDAQ did turn red. So, oh, fuck. So, okay, I'm short NASDAQ at 59. The next one would be 79. The next one after that would be oh, what happened here? $99. Okay, I don't know why this moved over here, but whatever. All right, let's go to the other account. So again, you know, we had a big range, red move here. I took this little red to the downside. Let's see, let's see if this this works a little bit for us on the NAS. And where is my gold? Well, gold really spiked against me. That's my 42 gold. I don't know what's going on with my gold here. Oh, my NASDAQ filled. Okay, let's go. My NASDAQ is actually positive now. I want to go to my NASDAQ. Yeah, I'm going to get that. So I'm taking, I took 40 points out of $40 out of NASDAQ because that filled up. And I got rid of all my NASDAQ positions, which is what I really want to do best. And now I'm trying to figure out where my gold is. But did my gold fill too? No. Where's my, is it 43? Oh, I'm in the wrong account. Okay, so yeah, gold did not fill. So my gold break even is 45.9, and I'm like at 48. So it's got a long way to go. This is the 43s. Yeah, this gets very ugly here. But that's fine. That's just, I told you I suck at trading trend. And here's the gold. And this was, this was not a great. This was really a trend reversal trade in a way, because remember, it was coming back up, and I was like, oh, I think it's going to be a retrace trade now. And we got killed on the gold trade. So just fine. So this is going to be the account I'm going to have to work out tomorrow to try to rework this particular trade back up to a positive territory. But the other two accounts are super positive because I'm trading them properly. This is a good lesson also, by the way. Trade what is. I do a lot of trades here with you that are half-ass trades because I just want to show you entries versus what I would consider to be great trades for my own account. Like I would have never fucking traded this for my own account properly. But I don't care because this is the other beautiful thing about having lots of prop accounts. They're dirt cheap. Doesn't really bother me that one of them is negative because I'm running like 3 or 4 of them into positive territory. And the ones that I trade properly, the ones that are like this account, that is a pure fade account where I'm just going to be on the opposite side of the trade all the time. I did it properly, right? So here's NASDAQ. You see the you saw all the trades properly done, right? You see how I took them all back. Now we're super overbought, right? And now again, I want to be looking at the next red zone to come in and see if I could take it. even S&P is getting to be a little bit overbought here at the 30 level. Gold really popped, man. You see, gold was like 10 points above the moving average and getting wide in between the moving averages. So it's really, really getting overbought. Waiting to see if this was going to be red. It's not. I'm going to stay patient. Wait for the next red zone to come in. Probably the last trade I can do with you guys today. Do I focus more on technicals? Yes. If you're trading scalping, you're primarily focusing on technicals. It's a big candle. I wanted to short this, but it's a big down candle. It's not so well. It's 75. If it goes 20 points, see, 20 points is my target, and if the candle is 20 points, I'm really leery of taking that trade. All right. I don't know what's going on over here. Let me I might get rid of this. Oh, there was like an extra thing here. MGS, MNQ. Okay. All right, I'm going to sell this NASDAQ. Where am I in? What's my entry? 66. Let's give it one more time. So it's going to be 76. 86 would be the next one. Oh, no, this is the wrong one. 4. It's got to be 4. Six. Okay. What account is this? This is the 43 account. Oh, this is the shit account. I sold it in the wrong account. Okay. You know what? I'm going to take this. I'm going to exit out. It's fine because this is account. There's no point in me making profits on an account that I gotta work my way out of. So I'm going to leave it alone. I wanted to take it in my profitable account 44. Okay, let's take this account. Let's just watch this a little bit here. So 69, 89, 25. All right, now here we're going to do, we're going to just take this a little bit, bring this up a little bit, because I got to run. I got a meeting in about 10 minutes, guys. But hopefully you get the idea. Like, I'm basically just waiting for overbought, oversold conditions, and then I'm waiting for a confirmation that the price action is telling me it wants to go that way. Once I do that, that puts me into a much, much higher probability zone of winning the trade. That's all it is. All day long, I'm just trying to win the trade, win the trade, win the trade, win the trade, right? There was actually a great trade in the, in the S&P. If I just focused on all my counter trend setups, which I think I'm going to do from now on, because I'm really, really good at trading counter trend. You guys are, and then I'll point out the trend trades to everybody else who wants to do trend trades. And I think that's the problem. I can't do trend and counter trend. It just completely takes my focus away. Like, this was a great counter trend trade here too. I could have taken this S&P over here at the 55s. Would have been an easy trade as well. I'm going to simplify the indicator a little bit more for everybody. I'm going to put the little rocket ship on where the entry should be, and we're going to make it even much more easier. Any more questions before I go, guys? Any last questions before we wrap up? All good? Everybody take that last NASDAQ trade, or anybody take that NASDAQ trade? No? Okay. All right, guys. Everybody have a wonderful day. I will see everybody tomorrow, 9:15. We're going to try to go hard until at least maybe 10:45. Everybody enjoy. Bye-bye.